Yeah.
So Garrett, people want this amazing insight. I'm sure you're going to have some thoughts on some interesting bond opportunities over the next day or two, especially as I'm interested what the ramifications as the day progresses on Microsoft, what that does to Apple. Yeah, what do you got?
We're gonna take an extra 3 minutes because I want to talk about the algos.
All right, let's talk about the algos because this is
We have a
important.
chart. We have a chart. I
Yes.
want Ryan to share this. Okay, so
Okay.
this is what, and I'm asking you this question. This is not
Yeah.
something that I can answer because you are way closer to SIBO than I will ever be. I tried. I knocked on the door with the microphone. I was like, "Hey, can I interview you guys?" And they're like, "Get that." Okay, so look at this chart, right? This is volume weighted average price. This is the SPY. This is the S&P 500 ETF. Okay.
Mm-hmm.
Now look at these moves. Look at the violence of these moves over a 15-minute start to yesterday. Are
Yeah.
the algos in any capacity? And you can answer this because I just don't know. I'm hypothesizing. I'm trying to start the research. You look at the second circle that I have here. If I'm algorithmic, if I'm designing an algorithm, I would buy that dip and then I would sell an out of the money call that expires that day. And then I would look for a rebound. And if it doesn't come, that call that I sold as I bought at the same time would provide protection. Do you see what what my thesis is here?
You're catching these violent moves. You sell the out of the money call at that second top band, which is probably a spot where the market's going to turn out anyway. You call away.
You're buying the SPY at 398 and you're
Right.
selling a call at maybe
At
400
like 400. But
because
you're selling what call are you selling? Is my
well,
question.
look at it, right? You buy
That's
the
very
dip at 398, sell the same day 400. Yesterday, the
Yeah.
low of the day was $1. That was that point at 398. That locks your upside in at 401 if it gets there. And then your downside protection is 397 because you sold that call on that day.
I think it makes a lot of sense. And you would almost kind of do the opposite on the downside, where you would maybe potentially, buy a put. What I would say is that the one thing that's a little interesting, Garrett, is that they're underpricing at the money straddles right now a little bit.
Right.
And that is so you're out of the monies. I think there's a real opportunity for premium selling right now. This happened on Friday. 37 of the top 40 strikes that traded on Friday were expiring that day. There is an incredible amount of volatility. I like the approach. I think it makes a lot of sense. You get the downside protection call.
Here's the thing, Mark. I'm not saying that this is a strategy that we are employing. I think this is a strategy that algorithms are starting to deploy. September, October, November. That is what this market has created. We'll talk a little bit more about this, but I think that this is something that you and I need to chat about. I think we need to investigate it. I think we need to do an hour on it. Not selling anything, just talking about this. Because I think this market has changed dramatically in the last 5 months compared to what we are used to as traders. What we did in 08, 02, a lot of things are out the window. We're shifting our attention into different ways. Let's talk about this. Let's make this a theme. Let's investigate this together. And again, it's not just about actively trading. It's about understanding the fundamentals of the market, the technology behind it. And we don't want to be in a situation where we're being conned in any capacity because there was some change to the way that algos or institutions have changed. We got to stay on top of that. So we do have a journalistic capacity and responsibility to do so. That said, let's get to trade talk. I held everybody back.
You did. And let's not forget the capacity of what this. No, we both did, because I think we're having some important topics. This algo thing is really important. What is going on with the algos and same day expiration options has completely changed the way the VIX moves going forward, permanently. Yes, let's get together for an hour. You and I are going to sit down. We're going to put something together. We're going to break it down. We're going to educate everybody on what they need to know about what's changed in the last 6 months, because the
Yeah.
changes are, this is the biggest change for the markets since probably 2008, 2009, maybe bigger. This is the biggest thing since quantitative easing, I think.
I agree.